Hi everyone, it's Dina with Numbers Don't Lie. I just wanted to come on and make a quick video because as I'm doing my end of year client meetings to prepare them for the upcoming tax season, some of these um, questions come up when they are using their personal assets to benefit their business. So the big one is going to be the home office expense deduction. So there are some very specific rules related to the home office expense. And in order for your tax professional to make a recommendation or a good assessment as to how much your deduction should be, you would want to have some information handy. So I went ahead and created this Google Sheets, and you can do the exact same thing for free on Google. And really just started listing out some of the more common things that I see related to home office expenses. Sometimes I do see that people have written a check to their mortgage or paid their mortgage from their business bank account. This shouldn't be too hard to track. We could probably easily find out how much you pay every month in mortgage. A little bit harder to track would be utilities, so because there are different utility companies, but you would definitely want to go ahead and make some time to gather what you've spent in utilities, or and you could even add a line and put in Pacific Power or whoever it is and keep a running tally of what you have paid throughout the year in utilities, or you can do a lump sum. Either way works as long as the information is accurate. I also sometimes see some insurance payments coming out of the business bank account, and specifically when it relates to the home office, we want to make sure that we understand how much is related, the how much of the insurance is related to home office. So some of us, or many of us, have our home insurance and our taxes coming out with our mortgage payment. And if that's the case, you really don't have to do much here, just because we will be able to grab that information from the 1099 that the mortgage company provides to you sometime in January or February. So again, if you have not had a bookkeeper, or if you have been doing the books yourself and you have been taking these deductions off of your profit and loss, you're going to want to get a hold of a bookkeeper or talk to someone about removing that off of your profit and loss. There is a very specific way that a tax professional has to look at and assess what your home office deduction will be. And there's a couple of factors, one being, what did you pay in total for running your household? The second will be, what portion of your household is used exclusively in business? And many times I have the conversation about the portion used in business. So if you have a 3-bedroom home and one room is used exclusively for your office, then we would want to take the square footage of that room in comparison to the square footage in total of the house to make our percentage allocation. Most people don't realize, but you cannot take a business deduction for any personal use of the home. So we want to make sure that we are recording and deducting the appropriate use, so that there are no complications later if it ever comes up for an audit. The other big item that I see often in people's books, let me move myself here, is that often I will see ATM deductions coming out of the bank account, and they will say ATM deductions on the bank statements, yet they will be coded to something else, let's say job supplies, or they will be coded to, contractor payment. So a couple of things happen there is that the ATM cash withdrawal itself is not a deduction. And really, what we do need to do is have a receipt to offset the cash. If you are taking money out of the bank account and paying let's say a day labor, it is really important that you have a petty cash receipt with the name of that person, because as we all know, IRS does make business owners report what they are paying contractors or other people in cash if we are taking a business deduction for that. So the question will always come up is, who did you pay and how much? Because we will need to report that to the IRS when it's time to report 1099s in January. So what I do ask my clients to do is go back and list out the receipts, the dates, who who they used, who they paid essentially when they withdrew that cash. That could be maybe Home Depot, and they bought some job supplies, and it was $100. So now this $100 is going to offset the cash account, and the deduction is going to be recognized at that time. But if you have just taken cash out of the bank account and there's no way of accounting for it, this is not a good way to report deductions, and you should not report that as a deduction, because as bookkeepers, we only see line items on as things are coming into your bank feed, like the ATM deduction, but really we would have no way of knowing or helping you prove that ATM withdrawal was for whatever reason. So it's really important that you start gathering your receipts now and submitting that to your bookkeeper for proper coding into QuickBooks. And then finally, the last thing is vehicles. If you have any vehicles that you are using in business, it is really important that one, you let your tax professional know down here, what kind of vehicle is it? Is it a 1999 Ford? And you also want to list out the same information related to that vehicle. So if you had some oil changes, we want to know the day of the oil changes, and we want to know how much you paid for the oil change. That's probably too small of an amount. So let's just say, I don't know, $70 for the oil change, whatever. And then we will just say maintenance here. Same thing, Les Schwab. I don't know, we fixed a tire and tires. And the reason for this is we want to make sure, especially if you have more than one vehicle, that we are recording the maintenance for that vehicle, and just to keep a better record. Now, there will be an assessment done once again by your tax preparer that will ask you for your mileage log. And if you use your vehicle 100% in business, and if so, they will want to know if you have a second business registered under your name for you, or if you are doing married filing jointly, or you have a spouse. They will want to make sure that the spouse also has another vehicle for use, and that this vehicle is truly 100% business use. Now, that's a conversation that you do need to start having with your tax professional now. I am having these conversations now with my clients. I am a bookkeeper, so I do tend to be able to answer these questions in advance, as opposed to sometime in March or April, going into an office and having all these questions asked by the tax professional. At that time, it is very hard to go back and look at all this stuff and still make your deadline to file your taxes. So I hope you find this video helpful. I will go ahead and put my information down, and you can click on the link if you would like to discuss your personal or business situation separately. I'd be happy to help. Thanks. Bye.